Hey, good morning, everybody. Want to welcome you to our event this morning. Wow, this is Super Bowley. It's Super Bowl weekend, but we are preempting the Super Bowl with Super Bowley. That's what I like. You got John Hopkins here, Tom Bowley, and going to jump in, and we've got some special guests coming in from StockCharts. We always like to start out by asking where people are from. So if you can just go ahead in the comment section there and let us know where you are joining us from. Okay, let's see. Let's get this started right now. Of course, I'm in Charleston, Tom's in Charlotte. Where's everybody else from? We should get people from all over the world. Anyways, here we go. Raleigh is close by. Minneapolis, Minnesota. I have relatives there. Houston, we got a problem. All right, in Texas. Yeah, Texas got it so far. Pennsylvania, Williamsburg, Virginia. We've been there, Tom.
Oh, yeah.
Marco Island. I've been to Marco Island too. New Jersey. Great. I guarantee we'll get some from across the world. We have members all planet Earth. Here's somebody from planet Earth. Okay.
Yeah, I did see a Calgary. There was a Calgary that came across. So we know we got friends from the north.
Oh, yeah. East Tennessee. Okay. Good morning. All right. Anyways, want to welcome everybody. I know we have a lot of new faces in here today. Really welcome you. Thank you for taking the time to stop in. It's going to be a fun event today. We've also got members who've been with us for many years. We started EarningsBeats back in 2004, and we have members who've been with us since we first started. So thank you so much for all of your great support. All of our events are recorded, so no problem. If for some reason you're unable to stick around for the entire event, we will make sure you get a copy of the recording. I want to mention one other thing very briefly before Tom takes over here. Every time we do one of these webinars to recognize folks who came in and took the time to be with us, we like to give back. So we always have what we call a flash sale. And our flash sale is a great way to join our membership at a discounted rate. I'll come in a little bit later after we've got things started to give you more details and tell you how you can benefit from this great opportunity. In the meantime, Tom, I saw your article in StockCharts, and I looked at it and I said, well, I'm feeling the same way. Tom had first of all, a lot of you know that Tom puts out our EarningsBeats digest a couple times a week. That Monday one that you put out was so spot on, saying cryptocurrency, if it keeps plummeting, it's not going to be good for the market. And sure enough, within a few days, stocks were getting crushed, and particularly in the NASDAQ. So we figured, okay, maybe this is finally when the bears take charge. Next thing you know, Friday comes, and we see 50,000 on the Dow. Now, the S&P is kind of just floating nowhere, and the NASDAQ still not looking great, especially software stocks. But it is kind of amazing how when you try to squash this market, the bulls somehow say it ain't going to happen, not now.
Yeah, there were a couple key levels, and we're going to get to the draft here in just a minute. We're just a little talk here at the beginning. But, the technology group in particular, when the technology weighs on a relative basis, when it starts to weaken, the history of the market, especially during secular bull markets, is that the market tends to pause or even sell off. And so that's one of the areas I like to focus on pretty closely. And as you mentioned, software absolutely been horrible for the last 3 months. And that's really been the part of technology that's weighed not only on the sector, but the overall market as well. Yeah. A lot of big, large cap software names that have been beaten down a lot. And that it's been hard for the rest of the market to kind of lift off given that weakness. But technology was right against a recent support level going back the last few months. Literally came right down to a key area. I think it was around I think it's 234 to 236 on the XLK. Yeah. And then the S&P 500 had support at 66.97 from mid-January. And we went down to like 66.80 intraday and came back up and closed at 66.99. So we came back up and held that support level by a whisker. That was on Thursday at the close. So the bulls did enough to hold on Thursday. And then, of course, Amazon reported after the close on Thursday. And I thought, oh, okay, this is it.
This is it.
It's in trouble. the Qs were down 1% after hours on Thursday. And I thought, okay, we're going to find out what this market's made of. And overnight, we saw everything reverse.
Yeah.
And the Qs, everything opened up. The Dow in particular gaining over 1,200 points, back over 50, well, going over 50,000 for the first time in history. I thought that was huge. Transports confirming that move, breaking out the new highs. So you got the Dow theory being confirmed. This is all great news for the long term for the market, I think.
Yeah, the other thing,
we do still have some problems with the growth stocks.
The other thing, the Bitcoin dipped below 60 Thursday night and then roared back to over 70. But anyways, I'm going to get out of here, but I want to mention one thing. I see somebody from Sweden. I was up early this morning watching the Olympics, and I saw the Sweden women take the gold and the silver in cross country. So they're already off to, and the American women who were expected to do quite well, they were left in the dust. Anyways, lots of time left. I know there's a lot to cover, so I'm going to step aside. I'll be back in a little bit and share some great opportunity with all of you.
All right. Sounds good. Okay, so let's go ahead and get started. We are going to start the draft right around 10:15 Eastern, so about another 8 or 9 minutes, just to give you a little heads up on how things are going to flow. I do suspect that we'll probably go for an hour and 15 minutes to maybe an hour and a half, just so you can kind of plan out your day. If for any reason you need to leave, just keep in mind that this is being recorded, so you can always come back. We'll have timestamps. You'll be able to go through and check it out at your leisure if you do need to leave for any reason. So don't worry about that. Some would say, well, can we just do it in 15 minutes? Well, not going to be a whole lot of education or entertainment if we do it in 15 minutes. So anyway, we do appreciate, though, you taking your time out on your Saturday and joining us. We love doing this stuff. I'm going to introduce my guest here in just a minute, but we absolutely love educating and entertaining, and we're always trying to learn. I mean, you never, ever learn everything about the market. I'm always trying to learn something, and I get a lot from a lot of my friends over at StockCharts. So that's why I love to get together and do these things. I do want to mention we had a draft. Because I finished last, I really don't want to bring it up, but we did have a draft back in mid-November where we did the same thing. We drafted 10 stocks. It was me, Grayson, Roze, Julius, the Kempenaer, and then also the scooter team from StockCharts, which we'll explain in a little bit. The four of us had our draft, and it came right down to the wire. But the scooter team, the momentum pick started to fall apart at the end. And Julius actually had a really good quarter in terms of his picks, and he edged out the scooter team. Both of them gained more than 13% in their portfolio since November 17th. Now, I don't know if you've been following the market, but the S&P is only up about 3%. I think the NASDAQ's up less than 1% during that period. So to take 10 equal weighted stocks in those two portfolios and gain over 13%, anybody will tell you that is phenomenal performance. So first, golf clap to both Julius and the scooter team, but Julius did win. So I wanted to point that out. Grayson also beat the S&P 500, I think gaining over 5% for the quarter. The S&P was, like I said, was closer to 3%. And then there was me. I could tell you I am living proof of what happens when you put a little bit too much stock, no pun intended, in one industry group. Like I did, I put 2 of my 10 stocks in software. And this is just a lesson to me and to everybody else out there. It can pay off when that group does well, but when it doesn't, it holds back your portfolio. I did gain about 1% for the quarter, or since November 15th, which I think was right around the NASDAQ's performance, but I did underperform the S&P 500. As a group, I'm going to go ahead and throw it out as a group. We all performed at about a 7 or 8% average for the quarter, the 4 portfolios, and they're all 10 different stocks in each portfolio. So that's 40 stocks. So overall, I thought we did an exceptional job. And I tell you what, the software stocks I had that we had in the group, I think Grayson had one. If we throw those out, we would have been in a lot better shape. So there were a lot of really good picks, and we're looking forward to doing that again for you. But I do want to I want to congratulate Julius on his win. So let me introduce the cast characters that we have today. First of all, we are having some difficulties this weekend, last minute stuff that we're going to apologize for, but hey, the show must go on. First of all, Julius de Kempenaer did have a family emergency arise yesterday. So he responded to me last night and said, I'm sorry, I'm not going to be able to make it. So he's going to be with family this weekend. So our thoughts and prayers are with Julius and his family. And I know Dave Keller is traveling and he's in a hotel and literally texted me right before 10. I don't know if we've got Dave. Do we have Dave, Matt? There he is. He did make it. So what'd you have to go through? How many managers did you have to bring in to get the internet working?
Tom, technology cannot prevent me from coming into dominating my good friends, Tom Bowley and Grayson Roze. All right, I'm here. I'm showing up. I'm ready.
Hey, I've been dominated for the last 3 months. So what else is new? So Dave is the, let me see, the president chief strategist for Sierra Alpha Research. Yep. And of course, Dave, longtime colleague and friend from StockCharts.com. Many of you know Dave from many of his shows over at StockCharts, still does a bunch of those shows. So first of all, thank you for joining us. Always a pleasure. I'm looking forward to your picks. I just hope they're a little bit worse than mine.
No, happy to do it. I love the format of this. I'm excited to see what you guys come up with. I followed the performance and the picks from, I think it was November when you did it last. It looked like a lot of fun. I'm honored to be a part of it. Thanks, man.
Awesome. Well, we're really happy to have you. Also, we've got Grayson Roze here today. He's the director of operations at StockCharts.com. Of course, Grayson and I go back a long, long way. When I first started at StockCharts, Grayson and I did a show together. I mean, it's been a long time, Grayson, but it's awesome to call you a good friend and reliable resource for us at EarningsBeats. We've been working with StockCharts for so long, but always great to get together, and it's a real pleasure to have you today.
Well, I'm happy to be here. Always happy to be called reliable. You know, no one's ever called me that before, so it feels pretty good. You know, thanks. I appreciate that, Tom.
Yeah, I just wish I had somebody in here I could pick on that I beat in the draft from last quarter, but I don't have anybody. I can't even talk smack with the Scooter team. They kick my butt too.
But Scooter smoked us all.
Yeah, it's. I'm looking forward to it. This is going to be a lot of fun. I also want to let everybody know that Matt Townsend, he is the one that's kind of running things here today. Matt has done a lot of fantasy football, and so he's going to kind of keep us in line here for the fantasy stock draft. And Matt does a lot of customer service work for us. He does a great job. Trades. He actually has his own chart list that we publish to our members, Matt's Hot Stocks, where he puts out 20 momentum stocks every week, does his own trading and all. So anyhow, I thought he was perfect for keeping us in line today. How you doing this morning, Matt?
Good. How you doing? Good to see you guys. Can't wait to get this kicked off.
Yeah, it should be a lot of fun. We also have some others working in the background. So I just want to let you know, of course, John Hopkins kicked this off, my partner. He'll be back in a little while, talk a little bit about a flash sale. We always like to give you all a great deal if you're interested in EarningsBeats. And I know Grayson is going to give you all an offer at StockCharts as well. We'll talk about that a little bit later in the show. We've got Erin, my daughter, Erin Weber, who works with us. She'll be kind of manning the chat a little bit. So if you have questions, she'll be there answering some questions for you. And then, of course, John Hopkins' son, Chris, he's our technology guy. He's the one that created SuperBowley.com, came up with the whole idea, which I thought was awesome. Yeah, let's give him a
well done
a golf clap. I thought that was a pretty cool name. So Chris will be putting together all of our picks, and we'll be tracking how we do over the course of the next 3 months. And so we'll be getting out in touch with everyone who's registered to let them know how they can track our picks. And hey, you know, while we're doing the smack talking with each other, you're welcome to do some smack talking in the chat. Let us know where we're making our mistakes. Tell us who you'd be picking, you know, in the various rounds and so forth. So I think it would, it'll be awesome, you know, to have a collaborative type of a show today. So that's what we're looking forward to. Really, you know, been looking forward to this one for a long time. I am sorry that Julius couldn't join us, but we'll do another one in the future and try and get some more of our friends at StockCharts to join along. Okay, so if you are new to this, it is 10:15. So let me give you the brief rules that we're going to follow as we go through. So there are going to be some rules here. We have already selected draft order. Dave wasn't there, so he's picking behind Grayson and I.
It's a miracle that it played out that way, Tom Bowley, but
Yeah,
whatever.
shocking.
Hey, you don't show up for a meeting, and this is what happens. So Grayson,
at least I'm ahead of the StockCharts scooter rankings, okay?
That's fair.
Yes, Grayson picks first. I'll pick second. Dave will pick third. Scooter team will pick fourth. The scooter team is the StockCharts Technical Rank. So it is simply a formula. And the StockCharts team is going to pick based in order of the sector scooter rank. And then within that sector, when it's their turn to pick, the scooter team will pick the highest ranked scooter score within that sector in the S&P 500. So they're going to get all the large cap multinational names, but they're going to get the one that's highest ranked in terms of the StockCharts Technical Rank, which is a relative strength formula. And so we will be able to predetermine as we go through whatever hasn't been picked, the highest scooter that's left within that sector will be chosen by the scooter team. So it is a snake draft, meaning that Grayson picks first, I pick second, Dave picks third, scooter team's fourth. Then we go to the next round. We reverse order. Scooter picks fifth, Dave sixth, I'm seventh, Grayson's eighth. Then we go back, Grayson's ninth, and so forth. That's the way we're going to work through these 40 picks. I'm really looking forward to it. The restrictions that we do have, number one, we all have to pick one stock from 7 different sectors: technology, consumer discretionary, communication services, industrials, financials, healthcare, and then one from any of the 3 defensive groups: staples, utilities, real estate. So you only have to pick one from those 3. So that'll account for 7 of the 10. They can be picked in any order. And then we'll have 3 wild card, which the wild card can be picked in any order as well. You have 3 wild card picks. You could put all 3 of them in technology if you want, so that you would have potentially 4 technology picks, which would then be somewhat close to what the S&P 500 is as far as weighting goes, because technology represents about 33% of the S&P 500 right now. And so if you want to try and get something somewhat close to that, you could do it that way and choose your 3 wild cards in that fashion. Or you can choose your wild cards in any sector you want. The only stipulation is that no other sector besides technology can have more than 2 stocks. So you can't have more than 20% in any other sector. So as long as everybody's good with those rules, I think we're ready to go. Everybody good?
Kick it
Good
off.
to go.
We're good.
All right. Matt, you want to take it? I mean, we're on the clock, right? Grayson up?
Yeah, Grayson's up. Let's get to it.
Let's hit it. My first pick, I am going with Valero. I'm sticking with energy. The strength that we are seeing coming out of that sector is fantastic. So I'm sticking with Valero. This is a steady trending name. It's been outperforming the market. I really like this thing on the daily, but on the weekly as well. If you zoom all the way back to a weekly chart, Valero is one of those funny little corners of the energy space that's actually outperformed the market over a long period of time. So I like the long-term relative strength on this. I also like the shorter-term relative strength. Just a really nice looking chart. VLO is going to be my first pick.
Okay. Sounds good. That was one of mine in energy that I can cross out because I had them on my list as well. So that'll maybe change some things there. But I'm going to go into a different sector. I'm going into healthcare, and I'm going to start off with Amgen. I loved Amgen's earnings report that just came out. I think the stock has been kind of a slower mover, but it's been a steady mover over the years. I think they've got a nice little dividend. I think with the recent breakout and the strong earnings, I think they're in a sweet spot for the market going forward. So I'm going to go with Amgen here. Up to you, Dave.
All right. First pick. There's a lot of pressure kicking off here. I tell you what, I'm going to go classic technology pick with Apple. And I will tell you why. I think the Magnificent Seven are no longer magnificent as a group. I think it's more of a stock picking exercise, which means the better charts in that group are going to perform a lot better than the worst performing charts, which is a different vibe than a lot of investors are prepared for. I'm not a huge fan of an overweight in technology, but I do think being thoughtful and deliberate and intentional about it makes sense. Apple is one that's had a nice rebound from mid-January to early February, which is something that most of the Magnificent Seven can't say. So I'm going to grab Apple before one of you guys do.
What do they do? I've never heard of this company.
It's a small technology operation based in California. You should use the symbol summary page. You can learn about it, Grayson.
All right, that takes us to the scooter, Matt.
That's right. So
how are we doing this?
essentially,
Yeah,
we're going to do a quick explanation of that. So we start out with the sector drill down, and we're going to rank this by scooter, just sticking with the idea of this is the scooter ranked team. So the first picks will be energy, material, industrials. It pretty much just in this order. The only one that's not going to get picked is discretionary. So with that said, the first pick is coming from the S&P 500, and it'll be in energy. And we're going to go Halliburton.
Okay, Halliburton it is. I saw VLO, I think, was the number 3 ranked scooter in energy. So, yeah.
I may have seen that. I may have noticed that.
You may have noticed that. All right, we're going to stick with scooter. We're moving to the second
Going to
round.
the next. Yep. 1 second. Stick with the same process, index members, and then the second pick is going to be materials for the scooter team. And it looks like we're going to go Albemarle Corp.
Albemarle. Okay.
I actually like that chart.
That's a great chart, actually.
Yeah.
Can you bring that one up, Matt?
Yeah, it's pulled up.
I'm seeing.
Oh, it might have frozen on the screen there.
Here, I can reshare.
Yeah.
Boop. 1 second. There we go.
All right.
Yeah.
Nice uptrend. Little pullback, too, to the 50-day.
Yeah.
That's exactly right.
Look at that. Scooter team buying on a dip. Wow.
What?
I'm already jealous. I'm also seeing a pattern on scooter team. They picked HAL and then ALB. So I guess the next one will have to start with LB.
There you go.
Okay.
About that. Okay. All right,
So
Dave,
let's
back to
see.
you.
Yeah, next one. Let's see. Where do I go next? I think I'll stay in the materials sector. I'm going to pick Dow Holdings. I'm all over the place on this one. This is this is what we call technical diversification. My kind of sweet spot for charts is very pro momentum, particularly strong uptrends with pullbacks, which is why Albemarle was one of my picks in the materials sector. But now that scooter guy grabbed it, I'm going to go with Dow Holdings, which is a commodity chemicals group. And this is one that I think has just rotated phase nicely. This is one that's been in a distribution phase for quite some time. I think this is part of that larger rotation away from growth into value. And I wouldn't be surprised if the next couple months are a very, very value intensive experience, which means charts like Dow could just be beginning. So I'll grab that now.
Awesome.
Very nice.
Yeah. I mean, I wondered, going into this, how many folks would just be going with all the strength, or how many picks would, be in downtrends that are just starting to reverse. I actually like this one because it isn't way overbought. It's not SanDisk, up. Instead, this one had been coming down for a while. And now that the momentum has shifted to value stocks, this one's starting to benefit. I kind of like that pick.
And I think in materials, a lot of people think of it as like precious metals and then maybe steel. And then you have to remember there's a number of other groups that are actually pretty good from a technical perspective, kind of picking up momentum here. I think this is one of them.
Awesome. All right. I'm going to throw the first curveball this event.
No? What? Mom never throws curveballs.
Yeah, this is what gets me in trouble. I'm going to go to the communication services sector. Only because I don't like a lot of companies in communication services. So I'm going to go with Outfront, OUT. Smaller company. Small caps doing well. Small and mid caps breaking out. So I think that this is kind of in that theme. But Outfront, after going through a period of sideways action, has just recently broken out, had nice earnings report. You can see that relative strength, where it's just recently broke out, not just on an absolute basis, but also on a relative basis. The only thing that's not great is the fact that its industry group, the media agencies area, has not been performing well. But there's no doubt this has been a leader in the market. It's in a sweet spot among the small/mid cap stocks. And like I said, there wasn't a whole lot that I really liked in communication services. So I wanted to get one that I did like. I didn't want anybody to surprise me with this later, although I wondered if I could let this just slide until later in the draft, but this is where some of the strategy comes in. I didn't want anyone to pick it, so I'm taking it in a second.
You're scooping it. I like it. That thing's moving up at all-time highs too. If you zoom all the way back, coming out of that long-term base, that's nice.
All right, Grayson.
I'm up next. You know what? I'm sticking with energy. I like this sector right now.
You only get two of them.
I'm maxing out my energy picks. I'm going KMI. I had a lot of names in the pipeline. That was a pun. I'm going with KMI.
I see what you did there.
I appreciate that. A little love there. Yeah, no, it's a great looking chart. And again, what I'm looking for in energy right now are names that have not heavily underperformed for their entire history, but suddenly they look okay. I like these names in that space that are looking great on the daily. They're outperforming the market, but also they've managed in energy to outperform over a longer period of time. So I'm using this kind of multi-time frame view right now. So KMI, just like VLO, is another one that's actually outperformed the market over a longer period of time when you look back over the last few years. So you've had that kind of long-term strength, but also coming out of a really nice base, breaking out, making new highs, everything you want to see on a daily chart.
All right. You're really irritating me, Grayson. I had 3 energy stocks, 3 that I listed that I was thinking about like selecting, and you have picked 2 of them in the first 2 picks.
Well, I was going to pick out 4 times. So yeah,
right. Oh my gosh. All right. Well, you got another one coming up to start.
Turnaround pick.
I do. The turnaround. Okay. So I'm going materials with my next pick. I'm sticking in there and I'm going PKG. I don't know about you guys, but like everything comes in a container these days or a box or something. The amount of deliveries that we get, especially with a kiddo now, oh my God, everything is packaged. So just kind of from a thematic standpoint, this just makes a lot of sense to me. But a great looking chart, making that really nice breakout. And again, when you look at the long term on PKG, it's actually been an outperformer in kind of an underperforming space, which I always like to see. It's really been kind of consolidating, really, really wide range, but it's been consolidating for the last, year and a half, 2 years. So it's starting to push up to the top of that range. Huge week this last week. So I'm buying this thing, not exactly at the optimal point, but I do like the chart on PKG. So that's my next pick.
Okay.
Good pick. Right.
You are now putting pressure on me to pick an energy name.
Well, I can't pick any more, I guess. So
no, you can't.
Dave can, but he doesn't like
done with energy.
No, he's kind of a low energy type of guy,
Wow.
Oh,
just while we're waiting, let the record show that the folks in the chat think Dow is pretty much the best pick so far. So I'll, even if I don't win, I'll always have that. Okay.
Gee, I wonder who picked that one.
Yeah, I wonder who paid him off. Dave.
Yeah, and thanks, Mom, my brother. Thanks all you guys for being on the show today.
All right. Well, I am going to go with my third pick, and I'm going to stick in the energy patch. I'm going with a big name, about the opposite of OUT, about as big as it gets. I'm going with ExxonMobil. And I mean, the stock has been on fire. I mean, obviously, I would rather get it on a little bit of a pullback. It's definitely on a heater right now. But I agree with Grayson. I mean, this money is rotating over into energy and materials. I think the next couple of months are going to be very strong. Energy, by the way, over the past 13 years, since this bull market really began when the S&P broke out above the 2007 highs, over these last 13 years, energy has outperformed the S&P 500 pretty soundly January through April. And from May through the end of the year, it has underperformed rather significantly. So technically or seasonally, we're kind of in a sweet spot here for energy. And also technically with the breakout that we've seen with this energy group, I really think this money rotating into a lot of the value and dividend payers and so forth, I don't think this is over by any stretch. And so even if ExxonMobil does pull back in the near term, which I would expect it will, I think it's going to set up as a really nice trade, especially if it gets back to that 20-day moving average. Unfortunately, I don't have the option to wait on it. We have to pick as of today, but I really like what's going on in Exxon, so that's why I'm picking it in round 3.
Good pick.
It's a great pick. All right. I can't believe this is turning into the energy draft. But now that I'm seeing them rapidly deplete off of my list of names I like, I'll go with DVN, Devon Energy, which is similar. It's like a better Exxon, Tom. It's like Exxon if it was less extended, a little less leaning over its skis. I mean, still it's had a pretty good run. I mean, all these energy names have had really good runs here. The weekly chart of DVN is what's most attractive to me. And I think that's what, for so long, you've been, I think many of us have been kind of avoiding energy because of the weakness in crude oil prices. It's just not been a great place to get any relative performance. But you're seeing all of that change here, from the fourth quarter of last year now into the beginning of this year. Charts like DVN have always been on the back of my mind. When it regained the 200-day moving average, that's great. Now it's above the 150-week moving average, which is another one that I look at. So I like that setup. And I think the seasonal tendencies that you're saying are going to help all of us probably. I think that energy space is going to be pretty good. So I'll take DVN here.
Good pick.
I feel like we should throw out one little comment here. It's a good time to mention it because we're picking so many energy names. All of our charts, if our charts look different than what you guys are seeing, viewers, our charts are all dividend adjusted. Now, there's a way to review charts on stock charts without dividends. You've got a little checkbox at the bottom. But I think it's an important note. We're including dividends in the calculations here and all that stuff. And a lot of these names that the three of us are picking are heavy dividend yield stocks, especially in the energy space. So it's an important little note. If our charts look a little different than what you're seeing, that's part of it. But I think it's a huge leg up, especially at a time like this with the rotation we're seeing.
Awesome. All right. Scooter team, you got the industrials. What do you got, Matt?
That's right. Let's go. Index members. Industrials. Looks like we're going to go with Southwest Airlines.
Going to give them a little love.
Little love.
Love.
Talk about a flyer.
Really?
That thing's been taken off.
Oh,
Jesus. Good looking chart. Definitely taken off. It's great.
I think it's probably its wings. I don't know.
All right. So then the second pick for the scooter is going to be out of the Staples group. And I can pull that up. So we got a Bungie Global.
BG.
BG. I like that pick.
Yeah, it's a good one.
I mean, food products in general have all been really strong here recently. A number of them have had these nice rotations.
Yeah, I'm not sure if I pulled up the airline chart either. Pull that up too.
Yeah, there we go. It's been moving.
Oh yeah. Yep, taking off, like we said.
All right, so I'm on, I think, right?
Yep.
You
All right, I will go with, I'll stay in communication services. I'll do Comcast, CMCSA.
All right.
Comcast is I've got this kind of theme with Dow, with Comcast. I think the way that I will win this is by leading into these areas where have been out of favor that are starting to get in favor. We're probably all going to attempt to play these in different ways, but Comcast is one of those charts that's just been so unlikable for so long. And so in that sort of environment where it's just in a big distribution phase, it's all about what do you need to see for this chart to deserve a spot in your portfolio? And it's things like, number one, we stop going down, which it has. Number two, we start breaking above moving averages, which it has. The moving averages start sloping up, which they have. The momentum improves, the relative strength improves. It kind of checks all the boxes for me of, something that is just starting to recover. And there's a lot of daylight above current levels, even with the run it's already had off of the October low. So I'll go Comcast.
Okay. Yeah, I can't really argue with your strategy. I mean, that was one of the things, that I was trying to weigh. Do I want to go with those stocks already showing a lot of relative strength that have already made big moves, anticipating further moves? Or do you look for maybe some that have maybe a little bit more value that are just starting to turn to the upside momentum? And I will say, I think Julius did this more than we did it last time, Grayson, and you saw what happened. I mean, he was just getting into some of the stocks that started to get into favor, and stayed away from stocks that had performed okay, like software. As they started to roll over. So there's something
watching that rotation.
We are going to take a break at the end of this round, so I just want to let you know. But if you do like what you see here, and if you followed EarningsBeats for a while, make sure you like the video. Really appreciate all the great picks that Grayson and Dave and the Scooter team are coming up with. We do try to, provide a lot of educational content here on our channel. So if you wouldn't mind, give us some love, hit that like button, subscribe to our channel. We do these live stream events from time to time. So if you're subscribed and you have your notifications turned on, anytime you're on YouTube, we will, you'll be notified of an event. So please keep that in mind. And that helps us as well. Even for those of you who are not subscribers, really helps us in our marketing efforts and so forth, just being on YouTube and just getting the word out about EarningsBeats. So really would appreciate that. Okay. So we got two more picks to finish off this round, me and then Grayson. And I am now going to turn my attention to, oh boy. I think I'm going to stick with the staples and a company that absolutely loves the month of February, and it's already gotten off to a great start. It's got a little bit of a sweet tooth. Anybody have any ideas?
You hitting Hershey's?
Ooh,
Hershey's it is.
Yeah.
HSY. I have been watching this company for a long time try to get above $200.
I've been doing this company for a long time.
They blew out their earnings. They raised their guidance.
Yeah.
And if you look at a seasonal chart, Hershey's does very well in the month of February. I have no idea why. Anybody have any idea what might happen with chocolate in February? But anyway, the stock made a big breakout. You can see the volume coming in after a long base. This year doesn't even do it justice.
Yeah.
But this is a stock that just broke out and kind of maybe along the lines of what Dave was thinking. I think this is just the start of what could be a much bigger run for Hershey's.
I'm glad you mentioned the volume, because I don't look at volume indicators a ton, but things like accumulation distribution or like the Chaikin money flow, all those, they've really accelerated, not just on the earnings win this week, but even before that on the run higher, you saw a lot of good volume going into earnings, which is pretty encouraging. I like that pick.
All right, Grayson, you get to wrap up round 4 and then we'll take a break. What do you got?
I am wrapping up with the industrial sector. I'm going FIX, F-I-X. This thing is just the poster child of what has been working right now. What has been working in this market is sticking with things that have been working. As simple as that sounds, the things that have been going up just keep freaking going up. That's what I'm focused on with this pick. FIX is actually one that, again, multi-time frame analysis, it's a long-term outperformer. I love the long-term trend on this thing. But especially on the daily, I mean, off of the lows from April, FIX has been incredibly strong, just trending higher, all the moving averages in the right order. This thing has barely dipped below its 50, just a handful of times since those April lows. Just a beauty of a trend. And that really is something that I've noticed across so many different corners of the market. What's working is the stuff that's working. If you're just kind of sticking with these trending names, you're doing shockingly well in this market. So that's what I'm going for with FIX here.
Hey, Dave, did you write down that quote? That's a good one.
I missed it the first 3 times, but the 4th time I jotted it down, Tom. Grayson, it's a great call. And the weekly chart of FIX is like a straight line from the COVID low to where we're at today. I mean,
print it out. You got a free
ridiculous
ruler.
uptrend.
Yeah. This is actually a stock that we had in one of our portfolios this last quarter. It has been a beast.
Yeah, it's a good one.
Love this stock. It was on my list, definitely in the industrials, one of the stocks that I was interested in. So I'm not surprised at all. That's a great pick. We are going to take a quick little break, give everybody a chance, get some water. If you need to use the restroom, whatever, go ahead. I know, John, you wanted to mention a little bit of what we do in terms of our flash sale. So take it away.
Yeah. Actually, before there's been a lot of trash talk in the comments section as well. I like this one. Dave has his good luck shirt on. It looks like a green heat map.
It's a Seahawks heat map, I guess. Yeah, that's fair.
Yeah, I thought that was pretty cool. But they're liking the back and forth. By the way, the pace is tremendous. We got a great crowd in here today, and I want to just take a minute to talk about our flash sale. I also want to make sure that both Grayson and Dave get a chance to talk about how you can connect with them and their services. But let's go ahead and throw up that flash sale if we can on the screen. So every time we have one of these events, we want to offer everybody in attendance a great way to become part of our EarningsBeats community. And if you go to our website, EarningsBeats.com, you will see flash sales, 48 hours only. And let me tell you what it includes. It includes an annual membership for $200 off our normal rate. So our normal rate's $997. You save $200, $797. And I'm going to throw something in today. Can make it even better. Sign up by midnight tonight, you get an extra month. So 13 months at the reduced price. You can't beat it. It's really just a great way to get involved with us. A couple of events coming up for our annual members. First of all, we've got our portfolio pick, our top 10 stock pick event coming up week after next. And this is where Tom reveals 10 stocks in our model, aggressive, and income portfolios. And in spite of him lagging just a little bit in this particular quarter, the last time around, the draft pick, I can't tell you how amazing the results have been since we started this. Absolutely crushed the S&P. That event will be coming up, I think it's a week from Monday. That sound about right? Yeah, I think so. And then we've also got what we call our Options Max Pain event. The Options Max Pain event is when we talk about opportunities to get involved in stocks that may have too many calls or too many puts. There you go. Take a look at this. Focus on that blue bar. That's our model portfolio since inception over the last 8 years compared to, you can see everything else that's on there. So it's been a tremendous success. Anyways, you have to be an annual member to get into that. A couple of other quick things. Every quarter, Tom has a market update. The next one will be right at the end of March. Got to be an annual member to get into that. And finally, very beginning of January, Tom did what we call our Market Vision event. That's the biggie of the year, where he puts his forecast out, talks about what he's seeing developing for the whole year. That's also for annual members. You will get access to that if you sign up. So go to our site, check out the flash sale, save a ton of money. It's a great way to get to know us over a year period. You will not be disappointed. Look at some of the comments. I'm sure other people who are with us right now will give you their opinion. But anyways, I want to do that. And I want to give Grayson and Dave both a chance to really talk about what you have going on.
Dave, you want me to grab the mic first?
Yeah, go ahead.
Yeah, so similar thing for us here at StockCharts. We want to give you guys a good opportunity to join at a discounted rate. So right now, as a special thank you for showing up today and for hanging out with us, we are running a special just for you guys. We're not advertising this outside of what I'm saying right now, so it's just for you guys. But you can sign up for StockCharts, start a free trial today if you're not already a member. But you can sign up for that free trial with a little coupon code, and when you roll into the paid membership after your first free month, you're actually going to get 50% off as a new member on that first month of service. So there's a coupon code for that. It's Super Bowl, all lowercase, all one word, Super Bowl 26. Not Super Bowley, sorry, Tom. But for this one, hopefully no one from the NFL is listening. Otherwise, we're going to get sued. Our code is Super Bowl 26. So keep an eye out for that when you do sign up. You can just go to our homepage, stockcharts.com, hit the big green button. That's as easy as it is. But when you sign up, there's a little thing that says got a coupon code, click here. Just keep an eye out for that, and you can enter that Super Bowl 26 coupon code. You'll get 50% off that first month. So we want to thank you guys for being here, and all the tools that we're showing off on the show today, all the charts that we're using, the indicators, the features that Matt's pulling up, it's all for StockCharts members. So if you want to follow us the way that we're doing the show today, definitely join that StockCharts membership. So
hey Dave, just before you jump in, here's for the next round. Here's a comment. Everyone has a beard. Short Gillette.
Yeah, Gillette's owned by Procter and Gamble now, PG. So there's your short PG. There's the play. Thanks for that. Great idea.
Dave, what do you have going on?
No, thanks so much. Honestly, I'm thrilled to be included with this, and I appreciate you guys, Tom and the team. You guys are awesome, and I've enjoyed this collaboration, and Grayson and the team at StockCharts, as always, a pleasure. My brand is called Market Misbehavior, so I do a daily market recap show. So if you want to follow every trading day what happens to these fantastic names we've picked, and I will make a point of celebrating when one of the stocks that Grayson or Tom picked struggle mightily, I will make sure that I highlight that in the market recap show. You can find that at marketmisbehavior.com. You're welcome to check it out there. We have a premium membership in the upper right corner. It's really educational more than anything, trying to give you the tools and techniques you need to make better decisions in your portfolio. So check it out in the upper right corner. You can use the code Super Bowl if you like for a good deal on your first 12 months of our premium membership. But most often, I would say thank you guys so much for including me. Always a pleasure.
Great. And again, if you like what you're seeing, make sure you hit the like button, subscribe to our channel. You got a chance to have everybody who's out giving you these offers today. It's going to make you a better trader. So I'm going to go ahead and turn it back over to you, Tom.
Okay. Yeah, I do want to also mention Grayson, as far as joining at StockCharts. If you join as an extra or pro member, you have the ability to download a lot more chart lists. And so anybody who is thinking about maybe trying us at EarningsBeats and also StockCharts, all of our research is done on the StockCharts platform. So all of our chart lists, our strong earnings chart list, our strong future earnings chart list, our raised guidance chart list, strong accumulation distribution chart list, all of our portfolios, short squeeze chart list. I mean, we do a lot of research, and the way that we keep it organized is through the chart lists at StockCharts. So if you are a StockCharts member, if you sign up for the basic there, you're only, and correct me if I'm wrong, Grayson, but you're only entitled to your default chart list, just one.
Yeah, you only get one. Yeah.
So you can't download all of our stuff. So you want to sign up for at least extra, because what does that give you? 250 or 350 chart lists?
Yeah, it's something like that. I think it's 250. It gives you access to a lot more, plus chart packs, and not to mention all the other features, advanced scanning, bigger charts, all of that stuff. It's huge.
Yeah. And all of us that use StockCharts might have things from time to time that we offer that if you're a StockCharts member, you might be able to download. And trust me, it's just worth the extra few bucks to move up from the basic to the extra. It's not even, shouldn't really be a question if you're serious about trading and investing. So I just wanted to mention that.
Hey, Tom.
Yeah.
One last thing for me. I got to get this comment out for you guys. Tom, Dave, and Grayson are three that I think are top shelf, and their companies are the best. That's a great comment. Thank you very much. You guys have earned it. You've earned it.
Yeah, we appreciate that. Thank you. I tell you, we put ourselves out there a lot. That's for sure. There's not too many folks out there on YouTube, or writing articles or whatever, as much as we do. So we do appreciate those comments. Really do.
Yeah.
Okay. So we're getting back to the draft now, and we are still on target. We should be able to wrap this thing up probably in the next 40 to 50 minutes, something like that, maybe a little ahead of schedule. Give us some time maybe to talk about the picks and where you think the others screwed up. Because I know already I can see a couple areas where you all have screwed up, but I'll be sure to mention that. Anyhow, let's go on into round 5. Let's see, Grayson, you finished round 4, so you are off now into round 5. What do you got?
Yeah, I was gonna short Dave's Comcast pick. Can I do that? Is that following the rules?
You cannot.
I can't. Maybe.
Man. All right. I'm going with Walmart.
Okay.
Company's on fire.
Ooh.
Chart looks fantastic. This thing is just moving up and to the right. It's what you want to see. WMT. What a name. I mean, they're just kind of doing everything right. They're crushing earnings. Everything's cooking on over there at Walmart, apparently.
Yeah, they're doing a pretty good job.
Yeah.
Based on the chart, I'd say that they've been doing a really good job.
Yeah.
And that's one that's really diverged from the rest of consumer staples for quite some time. This is, and honestly, I mean, it's a questionable bucket in staples. I mean, you could argue it's discretionary more than anything, but a really good long-term chart. Looks a lot more like the apparel names in consumer discretionary.
Dave, you and I talked about this recently, that Staples has these little cracks in it with companies like Costco and Walmart. I mean, I don't know about you guys, but buying like an inflatable pool at Costco doesn't really strike me as a staple play. But they're still bucketed in Staples. Walmart the same. You can go buy a big screen TV. I don't know how that's stapley, but it is.
Yep. I agree with you. You know what's amazing to me that so far we have now gone through 17 picks and there has not been a single technology. No, Dave got
one.
out.
I dropped one in there. Yeah.
And
but no consumer discretionary.
And no discretionary.
Yeah.
Two of the most influential areas of the market, and we have one pick through 17. But I'm going to change.
A lot of game left.
I'm going to change that with pick 18 because it's time. It's time. There, I tell you what. There's no doubt money has rotated away from growth and into value, but there is still some growth that's working. Semiconductors. Many of those semiconductor names continue to show relative strength versus the S&P 500. And my theory is with a lot of these growth stocks, whether or not you're looking for my theory or not, I don't know, but I'm going to give it to you anyway. My theory is that I think the market is starting to price out rate cuts. I don't think we're going to get the rate cuts at the end of the year that people are talking about. And I think they could get pushed into 2027. And I think that's what a lot of the repricing is doing. I mean, I did valuations when I was in public accounting. And of course, two things really drives the valuations. You've got earnings and earnings growth. A company that grows earnings a lot faster is going to be more valuable in the present sense than, a company that doesn't grow earnings rapidly or is more predictable in its earnings path. So that's number one. So earnings will drive valuations, but it's also the discounting of those future earnings, the interest rate component that also has major valuation implications. And so if the stock market is assuming that we're going to get these rate cuts, those future earnings become extremely valuable. And that's where many of those growth stocks have have just exploded over the last several years when we've gone through periods of rate cutting or the anticipation of it. And when we start to lose that, whether it's an inflation scare or whether it's possibly the strengthening of the economy, we get kind of the flip and we start to see many of these growth stocks being thrown out. So my theory is that there are some growth names that are so strong that the strength in their earnings is more than offsetting the potential of lower interest or of rates remaining higher for longer. So I think that's where it comes in, where these semiconductor names come in. Because if you looked at any of these earnings reports over the last 60 days, I mean, not only are these semiconductor companies reporting explosive earnings, but they're also raising guidance significantly, many of them. So my next pick is going into the semiconductors, and it's a stock that really has not paused. It just keeps going up, and that is Teradyne, TER. This is a name that was in our portfolios last quarter, and I'm telling you, I think it's one of the best semiconductors out there. It continues to be just incredibly strong, incredibly resilient, a great relative strength performer. And I look at that AD line and I'm like, I don't think anybody's selling this thing yet. I think we just keep buying and buying and buying. So Grayson, what was that line you said? If it's working, it's working.
If it's working, it's working. And what's working is working.
Teradyne's working.
It's working.
Teradyne is working. I didn't see that coming. I thought you were going to hit like Micron or something like that. Teradyne's a really good pick.
Yeah.
We're going to find out.
I like it.
It's a good choice. I like that choice. All right. It's interesting. I'm actually surprised we haven't had any aerospace defense names, given the fact that that's been one of the big themes here. And I don't think that's done yet, based on my amateur assessment of geopolitical volatility. So I'm going to pick Howmet, HWM. Recently pulled back to an ascending 50-day moving average, continuing to bounce. Friday was a nice bounce off of that moving average. This is one of those slow and steady gainers in an area of the market which I think has shown strength. And again, talk about a macro tailwind to a theme. I was taught, try to separate the theme from the companies, right? Just because a theme seems interesting, don't just assume that all companies in a certain space are going to do well. But this is one where the chart, I think, justifies its participation in the theme. There are a number of aerospace defense names that we could probably all pick 3 of them and still have plenty of room. But this is one that I think has been a good relative performer. And after some pullbacks, could be setting up for the next leg higher.
Well, and that's one that packages up so nicely as an ETF too. There's so many ETFs in this space that give you exposure to a broader selection. So,
absolutely.
I mean, if you like this pick from Dave, go look at the ETF layer for this, because there's a lot of options out there that are doing so well.
Yeah.
Agreed.
This is a good pick.
Agree. Howmet is actually one of the stocks that we had in our model portfolio this past quarter. And Grayson, you had talked about FIX earlier, FIX. Yeah. That was one, and Teradyne. So now we've hit 3 of our 10 picks that we had in our model portfolio. So I think my point here is that we're all kind of using the same kind of strategy. And we tend to look at the market very similar in terms of relative strength, and what's working is working. And so I think it's a great pick. Howmet was on my short list in the industrial space. That's a great pick, Dave. All right, Scooter team, what you got?
Scooter, we're moving on to the healthcare group.
Yep.
See what we got, if I can get this typed in. VTRS, Vitrius, probably butchering that.
Viatris.
Yeah, pharmaceutical name.
Anybody have any comments on this one? What do you think?
This is one of those. There's relative strength is good. There's that sample scan on StockCharts called like moving averages in correct order or something like that. And this one comes to mind as one of those classic ones where it's like the price above the moving averages, they're all sloping higher. It's just one of those classic uptrend setups. Yeah. These are the types of charts I kind of consider like a core position. Like if you have a portfolio of these kind of charts, you're probably in pretty good shape. So I like it. Good strong uptrend.
Matt, here's an interesting look. Pull this out to like 15 years with the thing up at the very top. You can do a long-term chart, like 15-year. I mean, this is like the most classic Weinstein stage analysis type of move. Yeah. This thing is just breaking out into a stage 2 move, potentially breaking out of stage 1 base.
Yeah, I see a double bottom there, and then coming up and taking out that in-between high, which I think is very bullish.
Yeah.
Again, not one that I normally would focus on, but if you just look at a 1-year chart, you think the stock's really overbought. Then you stretch this thing out 15 years, and you're like, wait a minute, this could just be getting started.
Yeah.
Yeah. Yep.
Interesting pick.
Very nice. All right, cool. Going back to the index members, and our next group will be real estate.
Real estate.
We're going to do PLD, Prologis.
Prologis, okay. Interesting. What's that chart look like? There we go.
It's the chart that looks unlike most other real estate chart. This is very much a positive outlier in that space, folks.
Not a whole lot looking like that.
No. Yeah, this is the outlier. It's a good chart, though.
Yeah.
Good chart and a decent dividend, which is pretty common in REITs.
Yeah.
Yeah. One other thing I want to mention, too, about the Scooter StockCharts Technical Rank, especially with that VTRS pick, because it does look good, on a 1-year chart, but then you go back 15 and it's been an underperformer for a long time. One thing that the Scooter does, and when I ever talk about the Scooter, I always talk about, any indicator, you want to throw out limitations. What do you need to be aware of? With the Scooter is only looking back like 5 to 6 months. There's nothing that goes back more than 5 or 6 months that has any bearing whatsoever on a Scooter score. So if you're looking at a 10-year chart and you're looking at a 1-year chart, you might come up with 2 totally different opinions on a stock, but the Scooter is only going to be looking at that short term. So just make sure that if you're ever picking a stock because it's showing a lot of relative strength, as far as the Scooter goes, you might want to just make the chart a little bit bigger and make sure that it still fits in your criteria, what you're looking for. I don't know if you have anything you want to add, Grayson or Dave, because I know you all use these as well.
Yeah, I mean, I'll let you guys in on a little secret. We're evaluating the idea of a weekly scooter that would be the same concept, but a different methodology. And so you'd sort of have these two different values because you can think about things over multiple timeframes, right? So, but that's a great reminder. And Matt's doing a really cool thing with the show here, using these things that we call style buttons. They're those little gray buttons over on the left side of the screen. They allow you to set different chart templates, if you want to think of them that way, and quickly flip between these different chart templates. The way that I use mine, I think Dave does something similar. I use mine with different time frames. So I've got my style button set up. I've got a daily at the top. I've got a weekly below that. So I can really quickly and easily flip between daily and weekly charts. When you're thinking about something like the scooter, it's a good reminder. Bring in that different time frame. You can use the menu, the range menu, like we did earlier. But you can also set those templates up on StockCharts and actually sort of flip between those timeframes with these style buttons. It's a great little process booster.
Awesome.
Big fan of those.
Yeah.
Dave,
DK, I think you're up next, right?
Yep, back to you.
I'm up again. So I saw in the chat, by the way, I was just keeping an eye on it. Someone asked about the aerospace defense ETFs that Grayson was talking about. There are two that are pretty common. ITA is the iShares ETF, and then XAR is the sector spider, or the spider one. Just so you're aware, both pretty similar in my experience, but those are the two most liquid ones. Yeah. So where am I going to go? So I'm going to hit staples because I've not done that yet, and I need something in those defensive sectors. I'm going to pick, I forget who picked Walmart, but if Walmart was earlier on and just a better, more actionable pick, it would be Target, TGT, and that's what I'm going to take here.
Whoa.
Yeah. Target has had this brilliant rotation after significant support right around like $85, hit that low in April. It retested the low September, October, November, and then has just rotated higher. And I love the upside rotation. I love the fact that we're now just in this nice, consistent, bullish pattern of higher highs and higher lows. We're back above the 200-day moving average and just kind of continued. The weekly chart shows you how this rotation really appears to just be pushing higher into what I would call like an accumulation phase, just higher highs and higher lows. And the momentum is just in good shape with improving relative strength. It's something that feels less extended than some of the other big box retailers, but also with a really good dividend, almost 4% dividend yield. So I think that's a good mix of emerging strength, but an income component. So I think that could be a good play here for the next couple months.
Interesting. I was not expecting that one.
That's bold. You know what I like is that the dividend yield keeps going up on Target because the price keeps going down, and
price is so down.
Makes you feel really good about that dividend.
Get in now while the getting's good, while the yield's high.
All right, I guess it's moved on to me. Where am I going next? It's a good question. I think, industrials are so strong, and I don't have an industrial yet. So I definitely think I need to move into the industrials. I know you all have picked over them a little bit already, but I think there are a lot of really good looking industrial charts.
So many.
And so many that I'm still not quite sure where I want to go. I just know I want one. Wow. I might have to go with my old standby. I am going to go with my old standby. I'm going to go with Caterpillar. I had them in the last quarter. It keeps working. I just can't find a reason not to pick it. And if there's one thing that we talk about at EarningsBeats and putting together portfolios, it's that when you look at this chart right here, you really want to see every line going up from left to right on your chart. You want that AD line going up, you want price action going up, and you want the relative strength going up. And we're seeing that really across the board here. So I know that it's probably getting to be somewhat of a crowded trade. A lot of folks been jumping in because Caterpillar's been performing for so well for so long. But that's going to be my pick. I'm going to stick with it. I was in it last time. It was a great performer. I still think it's a better stock than Deere. in that space. And so for those reasons, I'm going with Caterpillar.
You know, these trending names that we're picking are a really good reminder. Caterpillar is such a perfect example of this. If you looked at a chart of this, if you showed someone a chart of this at the start of the year, they'd probably say, oh, that's gone way too far. There's no way you could buy that. I would never buy that thing. Look how extended it is. And it's up like 30% on the year already. We're a month into the year. It's crazy. I mean, these trends last a lot longer than you realize.
Yeah. That's the biggest problem, I think, in investing, or at least one of the biggest problems, is that folks will come off of trades way too quick.
Yeah.
You hold on to some of your losers too long, and then you get money and you make money in a stock. You're like, well, I've done really well. I better, go ahead and take my profits and get out of this thing. And then you're kicking yourself 3, 6, 9 months down the road because the stock just keeps going up. There's no reason not to like Caterpillar with the way it's looking here. And like Grayson said, if it's working, it's working. So that's what we go with here. Grayson, you get the next 2 picks. You get to close out round 6 and then start round 7.
Yeah. So I am 1 letter off of your last pick. I'm going to go with CAH. This is Cardinal Health. I'm sticking in healthcare for my next pick. Really strong name. Had a big reaction after earnings just a couple of days ago. But a heavy outperformer. This thing has just been moving higher. Little bit uglier of a daily chart to me, as strong as it's been. It's a little bit gappy. It's a little bit crazy. It's not sort of my favorite daily chart, but the thing has been strong. And especially when you look again at the long-term chart on Cardinal Health, if you go back like 5 years, this thing has just been powering higher for years. So I think that continues. I think with some of this rotation, away from ultra growthy tech and all that stuff, I think names like this just draw a lot of buyers. So I think they keep moving higher. So CAH is my my next pick out of healthcare.
Yeah. Well, at EarningsBeats, we obviously do a lot with earnings reports, and I trade a lot off of earnings. And I love companies like Cardinal when they gap up.
Yeah.
Most companies will fill their gap because when everybody wants to buy, market makers are on the other side providing liquidity and shorting, and market makers usually make money. That's why you typically see these stocks gap up and then fail to hold. When you get gap ups, like you see the last couple here on Cardinal Health, where you get the gap up and there's hardly any selling and it just keeps going up, to me, that is a sign, almost an illustration of insatiable type demand.
That's
for
true.
a stock. And I love to see that in charts. So anyway, just a couple comments there, but I really like Cardinal Health. That was one of my top 2 or 3 in the healthcare space as well. Good pick.
Yeah, it's a good name. I think I'm going to grab my technology stock now. My theory on what we're going to see is tech's not going to, it's not going away. We're seeing this rotation away from some of the most aggressive, most kind of growthy corners of tech. But I think that's actually going to open up some room for some of the kind of more, old school legacy tech names. We've seen this already. We've seen names like Intel and IBM actually do fairly well, outperform the market and everything. So I'm sticking with that kind of old school tech concept. I'm going Intel. It's been moving higher. It's been outperforming the market. Not a name that got a lot of love the last few years, but we're seeing that kind of start to change, and it's taken out some key price levels. It's moving higher, making some breakouts. I like to see that. So I think if we do see some money stay in tech, it's going to stay in corners like this, that you kind of just, you're never going to get yelled at for owning a little bit of Intel. So, yeah, Intel is my my tech pick.
What do you think of that one, Dave?
I mean, it's sort of the outlier within the semiconductor space, right? I mean, it usually moves very differently. And while semiconductors as a group have had a bit of a struggle recently, Intel's actually started to emerge. It's a tough one though. Foreshadowing, I'm most likely not going to pick a semiconductor because I think that's a very confusing space right now. But I don't mind it. It's an interesting approach. What do you think, Tom?
That's one I don't like.
Yeah. I mean, to be honest, I don't really want any tech. I haven't said this in a long time, but I don't think I want any tech picks in my list right now.
Bowley forced
have
us
one.
to pick a technology name, so we have to have one. I mean,
Yeah, I got to have
Yeah.
one. So I don't know.
No, it's tough.
Those are the
I mean,
rules.
for me, it's a conflicting pick because I do see the relative strength over the last few months in that
Yeah.
space, and it's a hot space. I mean, when you get a company that's outperforming one of the best areas of the market, it's kind of hard to say no to. But
It's fair.
I mean, you look across this chart, you can see overhead resistance
Yeah,
coming
a lot of it.
and the AD line is just not good. And when I have relative strength that's good and an AD line that's not, I tend to go with relative strength. I mean, you can't tell me the stock's being sold off and being distributed if it's leading its industry group.
Yeah.
Something just doesn't make sense there. And so from a common sense perspective, to me, I think relative strength is the, kind of trumps the AD line. But when I see the AD line going down, it makes me worry that a lot of this is gaps and maybe it's not something that's going to last, but the relative strength in one of the strongest groups, it's hard to argue with that. It's just, to me, it's as Dave said earlier, this is kind of a confusing space right now. Some of them just absolutely taking off. Others have pulled back. NVIDIA, the leader, has just kind of been going sideways for a while. It's like, why isn't NVIDIA going up with everything else going up in that space? But anyhow, we'll see how it turns out. I wish you the best of luck, but I hope it doesn't turn out for you. All right, back to me. So let's see where I'm going to go with this one. I'm going to move over to financials. Financials are sneakily doing well right now, and especially some of the smaller financials. I don't know if you've seen the regional banking ETF, KRE, moving to an all-time high. But it has just been sneaking up, and I know we can't take ETFs. I'm not going to take an ETF, so don't worry about that. But there are a few names in that space that I've kind of been, trying to figure out where I want to go in terms of, the size of the bank, because I want a bank. JP Morgan on a relative basis has been lagging for a little bit, even though that's one of the staples in the space. But there are a couple of others that I think look really good to me right now, some smaller ones, or maybe more mid-sized to maybe almost large cap. But I think I'm going to go with, I got 4 names here. Oh, boy. I was hoping you all would pick a couple of them so I could know.
Whichever one you don't pick, I'm going to pick the other one, Tom. So just keep that in mind.
I'm going to go with one that's on fire right now, and it's smaller, so it kind of fits more into that regional theme. I'm going to go with Provident Financial Services, PFS. This stock, on a daily chart, certainly has been showing a lot of strength of late. I think that's pretty clear. The last 2 or 3 weeks, it's been straight up, massive volume coming in to support this. But I think the more interesting thing, actually, Matt, if you can zero out over 5 years on a weekly chart, this is actually a company that has been that just recently broke out of a long base. And EarningsBeats members know I've been talking about regional banks and the fact that I really like this group going forward. I just think as the economy strengthens and we've now, we went from an inverted yield curve to an uninverted yield curve, that tends to strengthen banks. I used to audit banks. And so as a result, I think that these smaller banks are just starting to make a good move. And I like the fact that PFS, this is more along maybe the lines of what Dave has been looking at, this long-term base where it maybe hasn't performed as well, but now it's just starting with this breakout. And so I'm kind of banking, no pun intended, I'm banking on on PFS to continue this move to the upside.
It's a good pick. There's a bunch of regional banks that look pretty constructive right about here, and I think that play on the on a steeper yield curve, that's just not an environment we've seen for a while. And that could be a great tailwind for some of these names.
It's a little bit like looking at the energy space right now, where you get like the scan back of, all the good charts that I should look at, and your eyes glaze over. You're like, there's too many. They all look so good. How do you pick just one?
Yeah.
Which again is, a great. I'm glad that you're bringing up the KRE, the ETF layer on that, because it's another case where it's like, well, maybe the way to play it is just to zoom out, go after the space as a whole. That's a totally fine move, but. Yeah, I mean, there's so many different options. This is a good one.
Yeah, there's that KRE chart. So
yeah.
You can kind of see that big move really here over the last few months. It started kind of when we had our last draft, Grayson, back in mid-November. I mean, that's when we started seeing a lot of shifting taking place. And that's, Julius rode tailwinds, not so much on this, but on other areas of that shift. And so we'll see whether or not that continues. But Dave, on to you.
All right. This pick I'm struggling with because I usually point people away from this space, particularly the smaller names in this group, because they tend to be super volatile. They tend to have a binary outcome. They go to the moon or they go to zero, depending on drug trial type of outcomes. But I'm going biotech, and I'm going to do Biogen. And I'm hesitant just because of the structure of this draft, which I think is brilliant. I mean, I think it's a beautiful setup, but putting 10% of my portfolio in Biogen, for the record, is not anything I would ever do in my own personal portfolio. So full disclosure, this is like a 1 to 2% kind of bet at best, but my only option is to go 10% of the portfolio. So biotech is a tough space because they can have these huge binary swings. And so what'll happen over the next couple of months, this will end up being one of my top performers or an absolute drag on my portfolio. But they had earnings this week, and the earnings went very, very well. From a technical perspective, it's been in a sideways, almost like a megaphone kind of pattern, broadening range. But it broke out big time at the end of the week after a good earnings and good outlook for the second quarter, which makes me think maybe this is a time to run that next leg higher in Biogen. I may absolutely regret that pick, but here I am and I'm making it. And I need a healthcare stock, so there it is.
Yeah, I like Amgen better because it is a little safer to put 10% in, but I like
some clown in this competition picked Amgen already, so I had to go with Biogen. All right.
Well, Dave, you can rest easy at night knowing that you're only buying it 15% above its 50-day moving average in 2 days. So at least you're getting a really fantastic entry point on this.
Well, if the draft was held a couple days ago, like I wanted, it would have been fine. But here I am. So I'm going to blame the structure of this competition if it does not go well for me. But anyways, there's my pick.
And by the way, and I didn't mention this, but we will be entering all of our picks as of Monday's open. So whatever is shown is the open on Monday morning. Now, as far as I know, I don't have any knowledge over the weekend right now of anything that's happened since Friday's close. But if I did, I would pass it along. So if somebody's not, like Biogen came out with really positive news and you're going to shoot up and open up 40% on Monday, that would be a little problematic. But I'm not aware of anything. But I just wanted to make sure everyone understands. That's just to clarify. We are going to be buying all of our stocks at the opening price on Monday. All right, Scooter, time for you to pick. What you got?
Scooter time.
Scooter time. We got some communication services coming up. Looks like Warner Brothers Discovery.
Yeah.
All right.
So I looked at this. I mean, I knew that the Scooter was going to end up picking it, but I looked at this. It's a really interesting chart right now. It's just such a weird space. I mean, it's like something I wouldn't actually want to own, just given all of the madness around the Netflix deal and the whole thing. It's just kind of like, nah, I don't really want to be involved in that. But it's a really interesting chart right now.
This is this is one of those M&A names, and from a technical perspective, you can tell anytime a chart like this kind of flatlines and just a slow, steady drift, that means there's some sort of M&A activity that's being priced in. It's tough, and what can happen with this is all of a sudden, similarly like a biotech, it has this binary outcome if something goes wrong with the deal or whatever. But hey, the Scooter rankings don't know that, so. Go after it, Scooter. Go get them.
That's right.
Get your Scooter.
Yeah, and this is one of those stocks, Grayson. You and I talked about this the other day, where the Scooter, it's looking at these big gaps. These big gaps, you've had a couple of really big moves over short periods of time, and that gets factored into the formula for the scooter.
Yeah.
And so when you look at the chart, when I think of a stock that's got a scooter in the upper 90s, I'm thinking it's just been going up and it's still going up. This stock has been going sideways to down now for over a month.
Yeah.
And yet the scooter is still up there because of the way the formula is determined. So, and it doesn't take into account mergers and acquisitions. It only knows price action and formulas. So it is something to think about when you're looking at the scooter and trying to decide whether or not you're going to invest in a stock or not.
Yeah.
All right. We got a financial pick coming up from the scooter team. Matt, what do you got?
Actually, I think we got utilities first.
Oh, I thought financials were next on the list.
I can check that.
Double check
breakdown. Utilities before. Oh, yeah, you're right. I had them mixed up. Nice.
That's all right. We got financials, then utilities.
Financials. That's right. Looks like we're going to do Citizens Financial Group.
Ooh.
That was another one on my list. I had 4 banks that I was looking at, and Citizens was one of my 4. And I knew the scooter was going to take it if I didn't. That's why I was thinking about taking CFG, but I went instead.
It's just been cruising. I mean,
it's a great
moving
chart.
up and to the right.
Yep. Good chart. Good performer.
Yeah. Steady.
Yep. All right.
All right.
Dave.
I'm going to stay in the financial sector because I need to get one of these regional banks are going off the list, and I want one. Tom, everything you said in your pick of what was it, PFS, I think.
Yeah.
Great description of the shape of the yield curve. Regional banks have been, just not a good environment. Now all of a sudden it's a much more compelling environment, and I think that's going to be the case here for the coming months for sure. I'll take Fifth Third Bank, FITB.
Yeah.
There are a number of these that kind of good setups. Fifth Third is one that hasn't been in as much of like a long-term upturn, but it just emerged from a base in December. And I like the fact I caught that breakout. It's sort of like a big cup and handle pattern going back to like the end of 2024. And that initial breakout, I remember recognizing this. It came up on a scan I run on StockCharts every week, new 3-month highs, just to review that list and make sure I know what's on there. And it popped up. And I remember thinking, boy, what if this is just the beginning and this is the beginning of this acceleration? And it's just kind of gone onward and ever upward, as I like to say, from there. So I'll take FITB. I generally don't like to have extended names like this, but I don't have a lot of those charts already as I'm looking through the other 7 names that I've picked so far. So I'm going to pop one in there. I'll take FITB.
Yeah, this is backwards. And you can't really, maybe you can't read it backwards, but my four regional banks that I put up there, PFS, CFG, FITB, and PNC. Those were the 4 that I was looking at to buy, and
good
3
charts.
of them got picked.
Yep. Good charts.
Financial, relative strength works, folks.
Yeah.
I mean, there's a lot of regional banks out there, and for us to pick 3 of the 4 that I had put on my list, that's crazy.
Yep.
But good pick, obviously. All right, FITB. So it's back to me now. For my pick in round 8, I'm trying to figure out what I need. All right. I haven't used any. Well, I did use a wild card on the XLE because that was not a pick. So I have used 1 wild card. Let me see. Where else am I going to go? I tell you what, I'm going to go back. I haven't picked discretionary. I'm going to go discretionary. And I am going to go with one of my favorite stocks that's been in our model portfolio before. You might see it in again next week when we announce them. I really like Tapestry, TPR. Just another stock that just keeps on working. And so there are not a lot of those in discretionary, but I really like just that consistent outperformance. They just came out with their earnings, another big gap up, continued moving up after the earnings report.
2 big days.
Strength. What was that, Grayson?
2 huge days back to back.
Yeah, I know. I'm kind of like
Actually,
Dave.
3.
I would like to have picked it 2 days ago, but
But I mean, moving up intraday is A lot of demand for that thing.
Yep. Been tremendous demand. All right, round 8, your last pick in round 8 here, Grayson, then you can start off 9.
I am sticking in discretionary as well. I had a bunch of names actually that I had written down in this space. One that I really did like was RCL, but I'm going with Williams Sonoma, WSM.
Okay.
I'm going to buy some chairs and couches and stuff. A really nice breakout. I just like the pattern on this thing. It's choppy, it's a little bit messy, but I think you can draw yourself a cup and handle on that thing. And nice relative strength. I think we've got earnings out a little ways as well. Yeah, earnings not until kind of later next month, so you don't have to worry about that at the moment, which is nice. Just a nice looking daily chart, making that breakout. But again, one that's outperformed the market pretty heavily over the long term. So I like this thing on kind of that multi-time frame view as well. WSM is my next pick.
Yeah, I mean, it's been strengthening here over the since the beginning of the year. And not too many discretionary names, can support that kind of a move to the upside. So I think you definitely have a stock that's on the improve in an area that, quite honestly, is not easy to pick in right now, as far as I'm concerned. But and I think the scooter score showed that, with consumer discretionary being ranked 11th out of 11 sectors right now.
Yeah.
Yep.
All right. Round 9.
I'm up again, aren't I?
Yeah.
Turnaround pick.
So again, I mean, there's so many in this space. I'm going financial. I had a couple of the ones that have already been picked on my list. And I'm trying to decide between Key and Goldman, which is pretty different. I think I'm going to go Key, though. I think I want to bank in there. God, Goldman has just been so strong, a really nice name, but I think I'm going to get away from that, and I'm going to go Key, because you guys are talking about banks. And if that party takes off, I want to at least have a foot in the door. So, yeah, going Key.
Or we'll just bring you down with us.
Yeah.
Yes.
This could be terrible, but we'll see. No, yeah, a nice one on the daily, just moving higher. Good outperformance on this thing. Nice yield as well. Yeah, a little bit larger too. Not quite as small, but a nice looking name in that space.
Yeah, Key was on my first cut. It didn't get to my final cut, but he was on my list also.
Yeah.
There were a number of them. Yeah, it's like you said when you were talking about energy. When you pull up financial names right now, a lot of these banks just jump off the chart. They all look good.
Yeah.
All right, back to me again. I'm going to go back into technology, because while I do think there are areas of technology, like I said earlier, some of the growth areas I think you got to be careful with. I'm going to stick with what's working. And I'm also going to stick, and I'm going to stick with semiconductors, and I'm going to go with a small semiconductor. So what took me down last quarter by going with 2 software stocks probably will take me down again this quarter, going with 2 semis. But I am going to go with Kulik and Sofa, KLIC.
Ooh.
I absolutely love what this stock has been doing over the last couple of months. The volume that has been coming in as this stock moves up and up. I mean, this doesn't even tell you half the story. One thing that I had asked for a while back, maybe we can remind Chip, is I'd love to get a dollar volume indicator instead of the share volume. Because if you could see the dollar volume on KLIC here over just the last few months, if you go back to that daily chart, Matt, I do like that move up there, threatening to the all-time highs on that long chart. So I appreciate you bringing that up. But if just on the daily chart, if you just look at the volume, and especially with the earnings at the end of last week, those are massive volume days. And look, we're closing right on the highs. So it's gapping up, and then it's just buying all day long. Now, I think at some point we'll get a pullback. There might be a better opportunity for entry, but we don't really have that choice. We got to get in Monday morning. But I really think 3 months from now, the stock's going to be a lot higher based on its future projections. They did raise their guidance along with EarningsBeats on their top and bottom lines. And I think in this market environment, growth still works as long as you're growing fast.
Yeah.
No comment.
That's a tough name for me, Tom. That is what a pick I respectfully don't like because it's gapped so much. You're doing what I did with Biogen. I didn't even like my own pick as I'm making it. I'm like, oh, but it's up so much. So that scares me about those names because now we're assuming that it's going to sustain those recent gains. But for this, I think it's one of those when in doubt, zoom out kind of questions. If you look at the long-term structure, it's a great structure. Just from I mean, it's a tough thing about how we're doing the competition. We're picking it, right now, which means you have to eat that gain that just happened, but you can't deny the long-term trend. I 100% agree with you on that.
Yeah, and
this is one I haven't looked at. This is pretty rare. I mean, in my process, I look at hundreds and hundreds of charts a day, hundreds of different stocks a day, probably on average. This is one I haven't looked at in a very long time. So this is interesting.
Yeah, I mean, we literally just set this week its all-time high.
Yeah.
So, if you look at it in the short term, you say, well, it's gone up a lot. But if you look at it relative, it's literally where it was back in 2021.
Yeah.
And if you keep in mind the fact that small caps underperformed for so long, this is only a $3 billion company.
Right.
And now money is rotating more into the small cap area. And it's one of the fast growers in the semi space. I agree with you, Dave. It's kind of like that BIIB, the Biogen pick. It's it's not a stock that I would really want to put 10% of my portfolio in, but is a stock that's very capable of carrying the portfolio one way or the other. And I'm going to find out which way.
It's going to be your best pick or your worst pick.
It's such a great reminder, though, that a name that is breaking out to new all-time highs is something that might feel like it's up 300% over some number of months or even some number of years, but it's also, by a different time frame, a name that's gone absolutely nowhere for some period of time. So that's what makes this so hard. Is this up a lot, or is this absolutely gone nowhere for a period of time and it's just starting to move?
Yeah. All right, Dave, on to you. Next to last pick.
I need a consumer discretionary stock because I haven't picked one yet. To be honest, given how I know all three of us approach the markets, I'm surprised we haven't maxed out consumer discretionary because there are a lot of interesting charts in certain groups.
Yeah.
So names that I'm almost picking would be like Ross Stores or TJX, one of those, apparel names. Those are good. Starbucks is one that's just starting to work again. It's a Seattle company. I'm tempted there.
There you go.
One of those hotel names like Hilton or Marriott, like those are kind of breaking out. But
Hilton.
Grayson mentioned he almost picked Royal Caribbean and didn't.
Yeah.
So I'm tempted to pick something like that so I can completely make fun of him if it works out really well. And so I'm going to go Carnival Cruise Lines, CCL. I'll go in the same group as RCL, but this is a different one. I mean, CCL is a really interesting chart. The whole travel tourism space has started to light up. And so you're playing on further optimism there. Carnival's one of those that's kind of lagged behind some of those other ones, but just at the end of this week, finally broke out of a, kind of a 4 or 5 month base. Mm-hmm. And so compared to some of the charts we've talked, like a Hilton is really more just in this long-term uptrend. This is something that feels a little earlier on. And I feel like this might be better for the timing of this competition because it's just starting to break out. And if it can follow with the rest of that group and sort of push higher, there could be a lot of decent upside and outperformance over the next couple months. And then I can go back to Grayson and maybe print it out and put it on his desk at StockCharts headquarters.
Yeah.
So I'll go.
I have it on good authority that's how Warren Buffett has made most of his stock selections over the years, is which stocks are going to demoralize his friends. That's good. Yeah. He doesn't actually look at fundamentals. He's just like, oh, well, Gary's going to hate that I picked this one.
And I'm really a friendly person, but this competition's kind of bringing out the worst in all of us.
Yeah.
And so for me, I got to go cruise lines on.
Dave. What's
I'll do CCL. Good breakout.
Hey, it hasn't brought out the worst in us because I haven't mentioned the Cleveland Browns yet.
Ooh.
Come on, Tom.
Hey, you're wearing your Seahawks colors.
We waited.
I did that just to subliminally distract you from my home team. Okay, it was all part of the strategy.
I thought for sure you wear orange. Hey, I got my Panthers gear on. I can talk smack. You're one of the few franchises where I can actually talk smack.
It's so sad. It's a sad, sad life, Tom. Yep.
All right. Let's moving on. Next two picks. These are the Scooter team.
Scooter score.
That's right. All right, so we got utilities going first.
Yep.
And then we got AES.
AES.
Yeah.
It's actually a good breakout name with a decent dividend.
Yeah.
Yep.
Yeah, definitely nice on the dividend side. I mean, daily looks pretty good. Weekly, not so much, but we'll see. I mean, if the rotation away from growthy stuff continues, maybe this keeps moving.
Yeah, the only thing I don't like about it, I'm not a big fan of utilities here.
Yeah.
Especially if I'm right about rates maybe staying higher for longer. This is a little bit less attractive. And since utilities peaked versus the S&P 500 back in October, it's been really a steady decline where they've just been lagging. Now, this particular AES has been a really good performer. So maybe you can use that relative strength to make up for the weakness in the group. But right now, at least, I'm not a big fan of the utilities group. So I don't like the pick for that reason. But it has been a relative winner, and it is gapping up. And like you said, nice dividend. Dividends are a part of our return. This is a total return competition. So we'll see. But anyway, one more pick for the scooter. We're into round 10, folks. And by the way, hit that like button. Please hit that like button and subscribe to our channel. If you like this, we do a lot of stuff. Some of it a little more entertaining than others. Some of it try to be very educational, try to teach a lot of the stuff. I know Grayson, Dave, Julius, all of us do the same thing. We're trying to, give back a lot what we've learned, a lot of the mistakes we've made over the years. But anyway, if you do like the content and what we do at EarningsBeats, please give us some love, hit that like button and subscribe to our channel. We would really appreciate it. All right, last round 10, XLK, scooter team, what you got?
We got SanDisk again.
Oh.
We'll see how this goes.
That's what I'm thinking, Grayson. Let's see how this goes.
Yeah. I mean, again, it's one of the, we talked about this earlier, some of these names that are just absolutely flying higher, they always look overbought. They always look overextended. And then 700% comes and goes and you go, shit, I didn't buy it. So who knows?
Yeah. Well, I can tell you a couple years ago, Palantir was trading at $28 and it went up to 31 and I took profits. I was like, okay, that was a big move. I got 10%. And then I watched the stock go to 205.
Yeah.
It started going up and all the way on Palantir, I kept reading articles about, the stock's way overpriced at $40, at $60. It can't go any higher. And so I look at SanDisk and I'll tell you, looking at the earnings, their numbers were ridiculously strong. And they raised guidance off the charts. If a company can continue to execute, now it's being priced for perfection, but I do see upside in this stock if it continues to do what it's been doing. I mean, look at, the really good companies in the past, the NVIDIAs, the Apples, when they became leaders, and you never could get them cheap. They never were cheap. And so this is a stock that was over $700, has now pulled back to under $600. And we might be crazy thinking this, but maybe the scooter team's getting it on a pullback.
So this is funny to see. So it broke out on September 4th. It's up of last year.
Yeah.
Not 10 years ago. Last year.
Yeah.
It's up 950% since September 4th of last year. And from the breakout, it consolidated November, December of 2025, had that little period of consolidation. It's up another 110% on that breakout. So within the uptrend, it's up another 110% from its breakout within the uptrend. I mean, the performance numbers on this thing are just crazy.
Well, I can tell you when we put our portfolios together back in November, I looked at SanDisk and it had such a massive run up to mid-November. I could not, with good conscience, put that stock in our portfolios and have it represent the portfolio. And now I wish we had done that and left our portfolio alone and just left SanDisk in there because it's more than doubled, maybe 250% or whatever since that November high. So you're right. I mean, you don't know where the end is on these stocks. I think that the key here is you just have to understand the risk you're taking. If you're going to get into a stock like that that's so extended, if you're you're trying to protect your capital in retirement, don't look at SanDisk, please.
Yeah.
You'll find some stocks that we've talked about that are really great long-term performers, just breaking out. Their downside is going to be much less. The upside isn't going to be as much, but the downside is going to be a lot less. So I think you just have to understand the risks of what you're getting into. And as long as you're comfortable with the risks, I think anything goes in the market. We're going to find out with SanDisk. This may turn out to be the best pick of all 40 picks. You don't know. All right, Dave, your last pick, round 10. What do you got?
I hate only having one more pick here.
What do you need? You've got all of your...
So I have everything covered. I don't need anything. This is just for fun, this last one. And I will tell you, and I'm saying this out loud on the recording so we can all look back at this and make fun of me if this ends up being right. I am tempted to go full on breakdown and buy like a Microsoft after this, ridiculous downtrend, just assuming it's going to recover, or completely torpedoing my portfolio with like a Coinbase, which is down a ton because we got a couple months of daylight here, a couple months before the competition's over, and you're betting on a recovery. But I'm not going to do that because I'm going to kick myself if that doesn't end up being a good place. So I'm going to go with the classic approach to technical analysis, and I'll go JBL in the technology sector, because this is a stock just kind of in a great technical setup. Like, as my final argument, as my closing thesis, I'm going to say, generally speaking, I like charts that are just emerging from a base, that are showing renewed strength, that have been in a consolidation and are now starting to show signs of accumulation. It checks all those boxes, right? Big resistance around like 230 going back to last summer. It finally broke above there in December, now has pulled back to the 50-day and rotated higher. The momentum is strong but not excessive. The relative strength's trying to improve. I hesitate because I don't want to have too much technology because it's not my favorite sector right now, but I'm a big fan of being selective with good charts in JBL. I'll finish there.
Yeah, I agree with you. I really like the chart. I like the breakout on Friday, moving to a new high. This one is on our strong earnings chart list. I mean, it's clearly a little different play than some of the other technology names. And so for some of those reasons, I like it. What do you think, Grayson?
I like this, and I'm going to come back to why I like this when I pick my last one.
Ooh.
Almost identical freaking charts. Different spaces, but almost identical charts.
Different spaces. Okay. I was trying to play off a couple of clues you're giving me there.
You'll find out in, I guess, after you're up.
All right, Tom, what's the last pick?
I think he's just doing this to mess with me.
I am. I'm in your head.
Yeah, the one last thing I'll say about JBL is that they did recently raise their guidance in addition to beating on their top and bottom line. They raised their guidance for the upcoming quarter in terms of both revenues and earnings per share, and they also did it for the upcoming year. And so in our raised guidance chart list that we keep, we not only keep companies that beat, whether it's revenue or earnings it's got to be a certain percentage if it's just revenue. Somebody that's just raising revenue a little bit, I normally don't include. But if it's a big raise to revenue or if it's a raise to earnings, then I do include it in there. And it is rare that companies are raising both the current quarter revenue and earnings per share and the current year. That's a confident management team when they do that. And trust me, I follow these. It doesn't mean that the stock's automatically going to go higher because I've seen plenty of them fall apart. But I do think that it is a gesture of confidence on the part of management anytime that a management team does come out and raise guidance like that. So I just wanted to point that out. All right, I'm down to my last pick, and I have got several stocks that I am looking at. And it's interesting because, Dave, I think you mentioned Ross Stores. That's on my list. Discretionary. I really like that chart. Another industrial that we haven't talked about, FedEx, is absolutely on fire right now. That is absolutely charging ahead. Looking at, I don't have a material stock, but I like that company, Ball, B-A-L-L.
Yeah. Good chart.
That's another really good one. And then I've got technology, and you know me, I'm Mr. Aggressive, and technology just calls my name. And so I got one in technology that I'm really thinking about, that another one that Dave would not like at all because it is just absolutely fire. But I like fire. I like playing with fire. And so as a result, I'm going to go with fire. I'm going to go with technology. I'm going to go with another company that's fairly small. This one was I think it was in our aggressive portfolio last quarter, but this thing is just not slowing down. I absolutely love it. And that's Viavi, VIAV. Just like I said, on fire. VIAV, Matt.
VIAV.
Yeah.
Sorry.
There we go. But another one, just tremendous volume coming in to support this move to the upside. Great relative strength. It's group in terms of relative strength, just phenomenal. And even though growth stocks have not done well, the industry has done well, and this is one of the leaders. And I know, anytime you buy stocks that are hot, you always risk, a big pullback or maybe, the top. But you also, I think, leave the door open to continuing leadership, relative strength, and gains ahead. So I'm not really going to move too far away from what brought us here. I mean, we have a great long-term track record of beating the S&P 500. And the way we do it is with relative strength and leaders. And so Viavi, even though it is stretched, overbought, maybe there will be a better entry point ahead, but I love the way this stock is trading. And so that's going to be my pick number 10. That gives me 3 technology, which we did say we could go up to 4 technology. I am underweighting relative to the S&P 500, but I had to go three names in technology. All right.
I mean, that's an interesting one again, because it's the same concept we touched on earlier, right? When you look at this chart on a daily and you go back to like the 2024 lows, it's up like 300% off the 2024 lows. And some people would say, oh, that's crazy. You can never buy a stock that's up 300%. If you actually zoom out, though, if you zoom all the way out, it's really been basing for years. But if you zoom out to like a 5-year weekly, 7-year weekly, something like that, I mean, it's up 45% off the breakout above kind of the 18 level. So is this a stock that's up 300% or a stock that's up 40%?
Yeah.
Those are very different things. And your time frame comes into play there. This is an interesting name.
Well, I just think sometimes companies mature. I mean, this one obviously didn't do much for the last 5-10 years. And for some reason, and I don't have all the answers why, but Wall Street and the money tells us. I mean, that's what technical analysis is all about. You don't really question price action. Price action is giving you leaders. This is where the money is rotating to. And I think that over the long run, it's the best way to trade the market is to stick with strength. Now, the timing, and I do agree with Dave, if we get, what was that, Matt?
Said what's working, stick with what's working.
Working is working.
Yep.
And, Dave's got a great strategy too. A lot of these companies that maybe haven't been doing much, and maybe Viavi would have been a better pick for Dave maybe earlier in 2024 or 2025 when it was just starting to make that turn coming off of those levels. But I'm okay going with mature companies that are showing leadership. I like the relative strength, and I'll stick with that. So we got 1 pick left, Grayson, Mr. Irrelevant stock pick.
Well, guys, I'm picking a name. I'm picking a name it's a great looking chart, but it really captures kind of what's happened today. This has been the ultimate smackdown. I have just absolutely smashed you guys in this competition. Clearly. I mean, when I look back over the stocks that have been picked, there's absolutely no competition here whatsoever. So my final pick, just to kind of put a bow on it, symbolize everything that's happened today, it's going to be TKO Holdings. Now, if you might, if you know anything, this is the parent company of the UFC and WWE. So just like what they do as a business, this has just been a total smackdown against these guys today. But I mentioned that this reminded me a lot of JBL. And when you pull up these charts, if you put a daily and a weekly of JBL and TKO right next to each other, Dave, these almost look exactly the freaking same. It's crazy. Really strong long-term weekly charts. These are companies that have just been doing incredibly well for a long period of time. But on the daily, Really nice looking daily chart, a bit of a consolidation range within the last few months, and now pushing towards the top of that range. JBL has kind of made the breakout. TKO is sort of just starting a little bit lower in the range, but really nice daily chart, fantastic weekly chart, and just kind of symbolizes what's happened here today. So I love this pick for so many reasons.
I had 4 stocks on communication services. TKO, that's one of them. Had it jotted down there. If I had an 11th pick, that would have been it. It's a great chart.
Good chart.
You can tell how old we are. We got all of our stuff scribbled.
I got my notepad here too. So there you go.
I had to sharpen my pencil after the 5th round just to keep enough, going there.
Well, very, very interesting list, and I thought it was fitting that Grayson last pick is TKO. Trying to go for the knockout punch here.
Yeah,
and technical
elbow.
Yeah, I mean we got we follow technical analysis, so we got technical, TKO. I get it.
There you go.
I mean, I should have stuck with ball because I've had a ball, today.
That'll be the next time we do this for the next Super Bowl. Everything has to be a pun.
Super Bowl.
It's a ticker-oriented stock picking. I like that.
Exactly. If the ticker doesn't mean something, you can't pick it.
You can't pick it. Yeah, I like that.
Oh, well, it's been fun.
What a blast.
I mean, looking back over the picks, and we did this last time with Julius, Dave. If you look at the other 2 competitors' picks, and the scooter as well, maybe name a stock or 2 from each person's list that you wish you could have picked. So, Dave, you got any ideas? Like when you look at Grayson's list, you probably won't find anything on Grayson, but if you look at my list,
I mean, no, there are not. I mean, and this is what I love about doing this with you guys. I mean, I things you pick tend to look good for me. I mean, we have a similar kind of general way of thinking about conditions and thinking about opportunities. So I mean, honestly, I like a lot. I think a portfolio of the 30, forget the scooter guy, but the 3 of us, I think a portfolio of those 30 is actually pretty compelling. I'm envious of Caterpillar, I will tell you.
Yeah.
That one, I think that was you, Tom, right?
Yeah.
Yep.
Yeah, Caterpillar's a really good one. And I when I'm looking at my own picks, I feel like I'm underweight industrials because those kind of infrastructure names have done very, very well. And there are a bunch of them that are in these really good uptrends. And I have Howmet, which is like an aerospace name, but I really don't have any kind of classic industrials. And between like FedEx, there's a lot of names in that sector that just look pretty good to me. Even some shipping names that were on my short list. So I didn't get my portfolio there, and I think you guys did a good job of highlighting names like Caterpillar, which is these great consistent uptrends. I think those are great picks.
Awesome. Grayson, thoughts?
Yeah, I think Tom, from you, I really like the Exxon pick, but I think actually TER, Teradyne, I think would be the one that I like. It's just so steady, just a really beautiful trend on that. Dave, it's funny you mentioned Howmet. That one would definitely be towards the top of my list. But all jokes aside, I think my favorite pick from myself is that TKO chart because it combines a great long-term weekly with actually a pretty enticing entry on the daily. You still have a nice trend on the daily, but you got this sort of shorter-term consolidation you can take advantage of. So, Dave, the JBL chart looks so damn similar to that TKO chart. I think that would be the one I would
100%.
It's a fantastic chart. That thing has just been cruising for years.
Yeah.
I just to give the StockCharts scooter ranking some love. I don't mean to keep denigrating. It's just they're not here to defend themselves, so I feel like that's fair game. Southwest Airlines is a good one. I almost had JetBlue. JetBlue was on my list too, which I like JetBlue because it's a little less extended, but airlines are actually a really interesting group and all starting to kind of, not all of them, but a lot of them are starting to kind of push higher a little bit. Alaska Airlines, which is the biggest carrier in the Seattle area that I use all the time, just breaking to a new 3-month high. So when Southwest came up on the scooter ranking, I was like, ooh, I wish I had like an airline in there just to spread that out. Those are good charts too.
VTRS from the scooter, I would also throw that in there.
Yep.
Really nice pick. I mean, good space. Pharmaceuticals have been on fire. That's an interesting one too.
I wasn't familiar with VTRS until I pulled the chart up, and then I saw, that it had bottomed, had that double bottom, and came back, broke out of the last couple year range. And so that is kind of an interesting pick, especially with more and more money kind of rotating into some of those areas. Pharmas have been doing extremely well. As I look at the list, and you mentioned some of the airlines, and part of the problem here is if we had 20 stocks, I would be more tempted to put an airline in there, because when airlines go bad, they go really bad. And you put 10% of your portfolio into an airline, and
it's tough.
I've done that before in our portfolios, and it's come back to haunt me. So I'm really hesitant to do that with these groups that tend to just go up and then lose all their strength all of a sudden. So that is part of why. I mean, Allegiant was one I liked, ALG. In the space. I had it written down, but I just couldn't pull the trigger on an airline. But as I look across the list, I mean, first of all, I think fantastic job. I mean, when I look at these charts, it's really exactly what I expected. And as I suspected, when you all made your picks, many times I'm like, damn, X out on the list. X another one. If we're picking portfolios to try to beat the S&P 500, we don't have this exercise to go through. We don't have to worry about what each other picks. We can all just pick the same stock. But in this competition, it stinks, because we do make it so that, it would be no fun if, we all have 5 of the same stocks. The whole idea is to try and figure out, okay, well, this one's gone. What else do you find that's attractive? So first thing I would just say, generally speaking, is that there are not many picks in here that I would not consider to buy and own myself. All 40 of them, including the scooter team. There were a couple. Intel wasn't one of my favorites just because it's coming up against resistance. But there's so many on here. I loved, I thought the PKG was a really good pick. I like materials, and I'm a little bit bummed out that I don't have a material stock. But again, I don't know if I'm comfortable putting 10% of my portfolio into a material stock. The materials are only 2% of the S&P 500.
If there was a surprise, I was surprised no one took any miners, like Newmont is out there. I kind of assumed someone would do that. 10% of portfolio in gold that would have been an exceptionally good bet over the last 12 months, but can't have everything.
It's kind of like looking at SanDisk 3 months ago. It's been great 3 months ago, but I don't know about now. But some of the really good picks that you all made, I really liked. Going down the line, I don't really have anything, Grayson, that I didn't like on your list other than that Intel. Ones that really I thought stood out to me were, I love Fix. Like I said, we had that in our model portfolio last quarter, and I think that continues, or maybe it was an aggressive, I'm not sure. But I think that chart looks fantastic. And it's in the industrials, which is where all the money is going, all the love's being shown right now. So that makes a lot of sense to me. Dave, I think Helmet for the same reason. Just love that industrial space. And I look at my list and I've got, Caterpillar, but I want more industrials, but then do you want to have 20% in there? And that was a decision I just decided not to make. But industrials, when I made my last pick and went with that third technology company, industrials, I was giving a lot of consideration to getting another name in that space, just because the group is on fire. And I think it's going to continue. I think this is a trade that was overlooked for a long time while growth was going crazy. And so I think this has some staying power. And then as far as the scooter score or scooter team goes, I really like the CFG pick in the financials, but I think there are a lot of choices in that area. And we'll see how SanDisk works out. I like the stock, but is it overpriced? I think it's just a valuation question, and I think you can argue both sides.
Hey, Tom?
It is 11:58. Yes.
I think Dave got a point there. Like, nobody focusing in that gold sector. I think that was a minor mistake.
I see what you did there. I like that.
Sure, John, you didn't have to pick 10 stocks. Okay, it's not as easy as it looks.
I agree.
Hey, you all don't know John the way I know him. He prides himself on his fun.
Oh, I was in pain listening to those. All those jokes together, it reminds me of, I don't know. It's sort of like, never mind. I'm not going to go there. It was almost like altogether, it's like 2/3 of a pun. PU.
All right, we need to end this.
Oh, man.
I think so.
Actually, a couple
I think
of
so.
things. We did a little poll in terms of the 10th round. People seemed to really like JBL. That seemed to get a lot of love.
chart.
Yeah.
Good
That got a lot of love. People love the format. They love the the back and forth, and there's a lot of opportunity, I think, for people to take a serious look at these picks you guys came up with. I know it's a fantasy draft and fun, but you made very good points, really, about all of them.
Yeah.
This is a blast. Thank you guys so much for hosting this and for coming up with the whole idea. Tom, I guess thank you for having the last name Bowley. Do we have to thank you for that? Oh, this is creative and it's been a blast.
Yeah, it's a lot of fun. One thing that we've talked about as a group collectively is doing a little bit bigger group and drafting, maybe having 5 or 6 people along with the scooter team. And I'd be interested in the comments. Anybody, if you have thoughts, would you want more? I mean, keep in mind, it's going to take longer. And so a lot of people, will see something like this and they're like, oh, 2 hours. It was just too long, guys. Well, if you've ever been in a fantasy draft of any kind, this is what happens.
It's a marathon.
It's a marathon. They're smack talking, which I thought was a lot of fun. And also, the reasoning, listening to the reasoning. And I think it's educational. It's entertainment. And so I would love to know from you all, would you want us to have more folks involved in this draft going forward, if and when we will do this again, for sure. I think it's good. I mean, I love doing it because I love listening to your picks. I jotted some of these down, some of the things we talked about, because I think there's some real trading possibilities short term with some of the things that we talked about today.
Yeah, I think so.
Absolutely. So, but again, make sure you check out our flash sale. We do have that going on for 48 hours. John said that if you sign up in the next 24 hours, or is it by midnight?
No, by midnight tonight. We're not going 24.
Midnight tonight, you get an extra month for free. So 13 months for the price of 12, and it's our flash sale. So you're getting $200 off our annual price. I can tell you that at EarningsBeats, 95% of our members, roughly around there, are annual members, because we do offer a lot of perks. And we save you a lot of money. You're going to save a ton of money by being an annual member. Yeah. Also, Grayson Roze from StockCharts mentioned that that they've got a 50% off. It's not even being announced to the whole world at StockCharts. It's just for this group for coming in here. A big thank you from StockCharts.
Yeah, Super Bowl 26. Remember that coupon code. And like I said, when you're signing up for that free trial, so you actually get 1 month free. It's for new members. You'll get 1 month free, and then you can use this coupon code on top of that. So, but you look for that little area that says got a coupon code, click here. But yeah, thank you guys so much for tuning in. And I would say, the combination of an EarningsBeats membership and a StockCharts account, it's this beautiful synergy. You really get a look into Tom and John's process and how everything works, and you can really put these things together. It's a fantastic combination. That's why we love these guys so much and love doing events like this.
I got a comment here from somebody participating. I'm a loyal follower of Tom and Dave and will now follow Grayson.
Hey, that's me.
Hello. You better watch out, guys.
I'm going to apologize. I'm sorry we brought him in, and now you got to suffer with Grayson going forward. We've been suffering for years, so welcome.
Yeah, now you guys are all affected too.
This has been awesome. Dave, you got marketmisbehavior.com. Is that where you would send folks to for your?
For sure. If you want to follow every trading day how Dave dominates Tom and Grayson and the scooter rankings, and watch as their picks crumble and fall, unfortunately, due to market conditions, marketmisbehavior.com. My YouTube channel's linked there with my market recap show and my podcast, where Tom has been on the podcast and done a fantastic job. And Grayson, I need to have you on the podcast now that I think about it. But you and I do a bunch of stuff on StockCharts TV, which is awesome.
Yeah.
And then, upper right corner, click on Become a Member if you want more information. It's a lot of teaching you how to use the tools and techniques that I demonstrated today. use the code Super Bowl when you check out for 30% off your first 12 months. But thanks, guys. This has been awesome. And shout out, Maddie, for doing the running the charts. Appreciate it very much.
Oh, yeah.
Yeah.
No
Dave,
problem,
that's a
guys.
nice photo. Is that New York City in the background behind you there?
It is the Ireland side of New York City.
Oh, okay. New York City International.
All right.
Smart chartists hike away from their screens sometimes. That's what I'm demonstrating there.
I like that.
All right. Hopefully everybody had a great time today. I know I had a great time. Grayson, Dave, again, thanks so much for coming on board. Julius, our hearts are with you. Hope everything's okay, my friend. And we'll do it again soon. To everybody that tuned in, thank you all so much. I really mean that from the bottom of my heart and on behalf of the team at EarningsBeats.com. We can't do what we do without all of you helping out and supporting. Again, one last time, please hit that like button, subscribe to our channel. We would love to have you follow us here at EarningsBeats. While we do have a paid service, we do also give a lot of good information out for free, very valuable, as do Dave and Grayson. And so follow us, learn more. We're just trying to help improve your financial journey. So have a great rest of your weekend, everybody. And we'll be back at the market on Monday.
Adios.